Welcome back to the Crypto Power Hour, the number one crypto show on Rumble, of course, powered by our friends over at Somo Global, with your hosts, George Ballantine and myself, Lance Miliaccio. We're the Crypto Bros, and this is your ultimate deep dive into everything crypto, blockchain, and decentralized finance. We don't care whether you're a seasoned investor or a newbie just stepping into the world of digital assets. For the very first time, we're going to bring you expert insights, top interviews, exciting new projects, breaking news, and game-changing innovations shaping the future of digital finance. Because on this show, you know how it is. In crypto, we trust. George B., man, 7 a.m. Wednesday. How are you? Rise and grind, 5 a.m. for me, but how are you, buddy?
Doing pretty good. God woke me up this morning, so I say ahead of the game. Doing well, you know.
That's it. We'll have
another
two shows today.
Another day, another dollar. Just grinding it out like we do every day.
Yeah, no doubt about it. You got to do what you got to do in this economy. It's not easy. You got to just keep pushing forward. That's what it is. All gas, no brakes. So listen, of course, if you like the show, you know the drill. Thumbs up, comment, share, subscribe. If you can do the paid subscription, fantastic. If you can't, we know the economy's tough. Do what you can with a follow, or if you want a Rumble rant, tip us. We always appreciate all that because, of course, the expenses go on and you're always trying to push the shows forward. And don't forget to check our friends out at solem.global. They got a lot going on. A lot of it I can't necessarily explain to you right now, but they've got a lot of big deals in the works. I check out what they're doing. Maybe there'll be some opportunities on the horizon where it'll be a part of maybe some of your investment decisions. But great guys, Kirk St. John's grinding away as usual. He came back from Davos with some great stuff, so I'm pretty excited about it. Listen, we love our crypto, but we also always give a shout out to our sponsors, Genesis Gold Group. You can invest in gold and silver in your IRA. Of course, the numbers are fantastic over the last 24 months. But, listen, always having a backup plan. And crypto is one of them. But, of course, gold and silver. And this is the Prepper Bar, the 62.2 gram Prepper Bar, perforated and easily broken down in your choice of 3 separate denominations. And, of course, I don't care whether you use it for diversification, asset protection from inflation, economic turmoil, or in the case of a Prepper Bar, the unique utility for barter and trade, because you can just break off a small piece to make a payment. Easy way to do it. You can keep them in your wallet, your safety deposit, maybe your underwear drawer. I don't care where you keep it as long as you have access to it. You never know what's going to happen to the U.S. dollar under these conditions. So you can head over to thebigmigbar.com. You can remember that URL, or you can use the QR code, which George makes it easy for you. Take a snapshot, go there after the shows. And here's the gimme. All caps, Prepper is your promo code, PREPPR. That's PREPPR, all caps. That's going to get you 10% off on the silver and 5% off on the gold. Heck of a discount with gold prices the way they are. So thebigmigbar.com, all caps Prepper, or you can use that QR code.
Break me off a piece of that Prepper bar.
I'm looking. If you're looking at crypto, it's slowly creeping back up. Bitcoin's bad. It's like 70,000 and change. Everything's going up. XRP 140. We're good. It's going to go back up. And when that Clarity Act passes, it shall hopefully bring in a whole new level of crypto for us.
Yeah, but with Trump's new tone, if they don't get that SAVE Act passed on voter ID,
I know, right?
He's saying he's not going to sign anything else. I don't know. What a shit show.
I still say it doesn't really matter because the GOP hasn't put many bills on his desk to sign anyway. So big deal. We'll see what happens.
Yeah, no kidding.
All right.
That's the problem with DC. All right, let's get to it. So, of course, we've got the CEO with us today, Maxim Galash from Coinchange. You can check out their website, coinchange.io. He's a crypto fintech founder. One of the goal of making institutional-grade digital asset yields available to everyone. He strongly believes that passive income cryptocurrency solutions should be accessible within the transactional economy. To bring Wall Street to Main Street, Maxim achieves this through his Coinchange platform, digital asset management platform that delivers a scalable crypto returns to the end users of exchanges, DAOs, fintechs, and institutionals. Prior to founding Coinchange, Maxim served as a general partner at, and I'm sure I'm going to get this wrong, it looks like BGS Venture, I hope that's right, Toronto-based venture capital fund, and founded his own IT firm. He's also an investor advisor, serving as a board member at Wadam.io, FlySlot, BoxC.com, and it looks like LTM House, so Limited House. And he's investments, asset manager, startups, scaling businesses, trade and DeFi. So very well-rounded. Let's get him in here and get this show running and gunning like we like to do.
Welcome to the Crypto Power Hour, Maxim Galash. How you doing, sir?
Hey guys, thanks for having me.
Well, thanks
Hey,
for
we
being here.
appreciate
Well, an
you
intro.
joining us.
Nah.
We know you're a busy camper, man. You're always rising, grinding like we are. Listen, let's just talk about this. I don't know, your background was already obviously very deep as far as investments and asset management. When did you turn the corner and kind of decide that you were going to head down the crypto DeFi world? When was that moment about timing? Were you one of the original investors in Bitcoin in 2009? That's what I'm trying to get to.
No, unfortunately not. Listen, I wish. Yeah, I was in tech all my life in software, but before getting into crypto, I founded and ran and then sold a company called Allcan.com. It was a cannabis seed to sale platform that was fully licensed by the Ministry of Health in Canada.
Mhm.
So when we did an exit, my friend and partner stayed within the business. And then I kind of took a sabbatical and started, exploring. So that's when I found Bitcoin. It was 2017 when it went from 3,000 to 20 and then back to 3,000.
Mhm.
Yeah.
Yeah.
Stacked up a bit, but I mean, I sold during the
Yeah.
market cycles. I mean, I'm not a hardcore, badass Bitcoin
You
maxi.
don't have
So
those diamond
I mean, I
hands,
have some friends who
on
are.
your head, huh? No hodl.
No, not diamonds right here. Not
Yeah.
even AI. Not even AI.
Yeah, well, no kidding. Of course, we see that daily. We talk about AI quite a bit because, of course, it's deep and it's getting deeper
Yeah.
and more complicated. When it comes to content, especially. But let's talk about you have, and we've gone on this show. We've talked about how the regulation is being drugged through DC because, of course, the banking institutions don't want to give up their death grip on their low yield payments on, money markets and CDs. They don't like that crypto is changing that. You've mentioned that the plan for Coinchange is the bridge, that finally brings like Wall Street yields to Main Street. And with your engineering roots and VC lens from BGS Venture, how do you actually construct this? And you guys have got like this multi-manager fund of funds style portfolio. You're blending CFI, staking, DeFi liquidity provisions, hedge fund strategies. I mean, that's a pretty complex environment. How are you doing that? How do you kind of bring it all together? And what does that mean for the end user?
Listen, if you start with the regulation, when we started in 2019, that's when we started actually thinking about the business. I mean, 2017, I was buying Bitcoin. It took me a couple of years to kind of get to understanding that there's no good broker out there, in Canada at least, when I was there. We started building the brokerage business, and it was pretty straightforward what you have to follow. But when we added a DeFi asset management side for the business, it was not clear how is it classified. Is it a security? Do you need a broker license? Do you need money service business license? Do you need MTL license? Do you need to register with CFTC? There was no clear rules at all. I mean, when Biden came in last 4 years, I mean, there were no rules at all. There were only enforcement, right? So the rules by enforcement. Everybody got from small to large got subpoenas or got exempt.
Yeah.
Spent a lot of money. So smaller startups like couldn't survive or spent too much attention and funds fighting or proving that they're doing something that's right. So while the big guys, I mean, so couldn't operate properly. So it did stall the innovation, right? Especially with that specific industry, right? So right now, when we talk about not offering yields to the end clients like retail, we're just laughing pretty much, right? Because everything else, a lot of things have been solved all for right now. So we just want more and more clarity, more and more openness in the market, right? But there's already a lot that's been achieved so far. So because it's pretty clear who's classified like what with a clear act. I think there's going to be a market structure definitions as well in place. Stable coins are well defined and understood. I mean, security lawyers are also know what's the security, what's not. Like Bitcoin is a commodity, let's say, right? So there is no, let's say, QC rules for Bitcoin right now. You don't need to keep it on the qualified custodian as an example, right? So there's a few things but you can get a counsel advice and you can really take the business to market in the US specifically if you want to learn and spend a little bit of time and money, evaluating the rules because the rules are there. So that's already a good thing because before it was really non-clear. In terms of the banking, listen, I'm not sure that everybody's gonna run away from the banks. There's still a lot of banking licenses. I mean, and banking regulators been around for years, forever. So retail consumers, average Joe, who doesn't know what is Bitcoin, what is a stable coin, what is USDC, right? Circle is just a circle for them. So they won't go to buying some kind of a token, right?
Yeah.
Trying to get the yield on that. So I think we're way far from that. So I think it's a good fight that Brian Armstrong is doing, right? specifically. He's been out there, fighting for the industry, sponsoring, paying his way through, and making sure that he stands for it. But I think we're already in a good spot right now with the current administration, with a lot of clarity that's in place. So there's definitely always more work that we can do. And I'm not sure that the banks are very much afraid of us because they have private credit, they have mortgages. It's a huge market. I mean, whatever the retail interest account market is, overnight money market, I'm not sure they're going to be losing 100% of that, even if they allow the crypto businesses to service retail consumers.
You brought up something about the banks with people. Yeah, it's definitely going to take a lot of time to get people, hopefully, to pull away from the old banking system. And if they truly see what they're doing to them and versus the advantages of crypto, hopefully they'll jump on. But that's part of why we do this show, because we do a lot of educating people on crypto. You have to look at it like a lot of people don't know what crypto is. What's it about? Every time I talk to somebody new about crypto, they automatically, because of meme coins. And I tell them, forget about meme coins. Stay away from them. They're garbage. They're not going to do nothing for you. And that's people's perception. They see that and they see, people lose money. Yeah, but that's why we're here to educate on the show. The purpose of our what we do.
Yeah, we try to do these education pieces and put it into simple terms because we're just a couple of guys from back east. We're not quants. We're not experts by any means. We're just well read on what's going on in the marketplace. We're personally invested in crypto, and of course, we're deeply involved with Solum Global. But that being said, there's a real disservice. There's a combination of things that are really damaging the cryptocurrency market. Number one, meme coins and a lot of the pig butchering that's happening. When you start naming coins like Fart Coin and Godius Maximus, and really they have no utility, people struggle with that. They hear about it and they're like, well, what the hell? What is that? Of course, it takes away what I would consider the credible part. They don't understand the altcoin or the store of value that Bitcoin currently is. I don't know if I believe in it long term, but I think currently it is what it is. And they don't, the other difficulty I think is really on the chains themselves. To own different coins on different chains, you have to have different wallets, and that's very confusing. There is no, and I hate to use the terminology Google, but there is no Google, the wallet, the one wallet that rules them all. So you end up having 3-4 wallets. It's confusing for especially older people. They don't understand the seed phrase. They think that if they lose the seed phrase, they can just get back on the horn and call the company and get another copy of it, not realizing that it's gone forever. And then the press jumps on the big stories, like the guy that has $750 million worth of Bitcoin sitting in a landfill. And all those stories really, those are the tough parts, because we get a lot of the questions. They come into our email and they get in our chat on this show, which they may have some questions for you today. But that's the tricky part. And I do agree with you on the administration. It doesn't hurt that we have a very crypto motivated president, his own family deeply involved, billions in crypto, and they're mining Bitcoin, and they've got World Liberty Financial. But in some ways, I feel like maybe there's, because of that, there's maybe too much focus in the administration. But I don't know, did you guys have an equal or maybe a comparable to Gary the Weasel Gensler? Of course, he was the reason everybody got letters. He was the reason, I believe, he was in the pocket of the bankers very deeply. He caused a lot of obstruction, didn't understand crypto at all. He claimed it was it needed to be ruled by the SEC, and we both know that's not the case. Do you guys, and I don't know in Canada, do you guys have somebody similar to Gensler, or is the market more favorable for you guys?
In Canada, it was one of the first markets. First of all, I would like to comment something that you said before.
Yeah.
So Bitcoin is not crypto, I think, from my perspective. Listen,
yeah,
Bitcoin
right.
is a more of a digital store of value. It's already been publicly recognized in any possible domain, from Retail Joe to BlackRock, right? So it very much ingrained and not going anywhere. So if people are buying gold, they should definitely be buying some Bitcoin. In my opinion, it's not a competition; it's just a diversification. And Bitcoin, you can easily, if you travel, if you need to move capital, if you want to preserve your ownership, you want to buy Bitcoin, you don't want to buy real estate or gold. It's really hard to move, hard to store, hard to preserve the ownership. If you lose it, somebody else is going to find it. So I think Bitcoin is very different. Crypto overall, in my opinion, when I started 2017, I think it opened up a way for a regular consumer who's not accredited who doesn't have much wealth to have access to a certain investment products like indexes or some sophisticated strategies or hedge fund products will have access and ability to participate in the capital formation. Because right now, well, most of the capital formation on the pre-IPO markets, on the private markets, like a venture capital, private equity capital, was only accessible to accredited investors, the guys who have access to wealth managers, asset managers, and are classified to be qualified to invest, right? So what crypto did, they said there's no qualification, there's no classification. Wherever you are, wherever you are, you can invest in any project you want, right? So that was the ICO boom when I kind of joined 2017. So that's kind of my mark of the crypto when I wanted to join it. It looked for me like more of a capital formation business that opens up for a little guy to be able to, guess the next startup, participate in the next big stock, more like a penny stock business, right? From Wolf of Wall Street, but still like more global and open. So it does have its own cycles, right? Boom and bust, right? A lot of people lost money on ICOs, but some people made a lot of money. Ethereum ICO, Bitcoin ICO, XRP, you name it. Right now, Hyperliquid just recently, right?
Sure.
Great phenomena. A lot of people made huge amount of money. So that kind of phenomena of capital formation, that's what kind of dragged me in. And I still believe that in the US, they also have to change the rules for qualified investors. You don't have to have $5 million to be smart to invest, or pick your own, do your own analysis using ChatGPT or whatever sources you want to make your own decisions where you want to participate and allocate your hard-earned cash, right? So, and this is private markets, this is public markets, this is private venture markets, token markets, whatever you name it, hedge fund markets. So that's what banks do, right? On your interest deposits, as you mentioned, right? So if you keep money in the bank for the interest, right? So that they do manage that capital to try and risk, try to pay you whatever they decide to pay, but keeping the margin as the profit, right, on their balance sheet. So
yeah, of course. Usually,
so those people don't have access to basically people who use interest accounts. They don't have access to those more sophisticated strategies directly.
Sure.
So they become an unsecured depositors or secured to a degree, right? Because there's like you have a 100K limit, but you become a secured creditor or unsecured creditor to the bank, right? In a sense. So crypto, that's why I like that. It kind of opened up and gave people access to that. Your last question was about Canada. I think Canada had one of the first ETFs, Bitcoin ETFs in the world.
Yeah.
So it's pretty rigid system. I mean, and that's probably a benefit and a disadvantage because the rigid system doesn't allow for innovation. It does box it into the existing frameworks of the regulation. So in crypto, if you want to be an exchange, you have to be a fully certified broker. So you have to have a qualified custodian, have to have a certain settlement processes. So you have to have certain reserve requirements. So you become pretty much a stockbroker, right? And then if you want to have custody, you have to be a qualified custodian. So you have to have a certain other rules, and there's a tons of paperwork and reporting you have to do, and qualifications you need to have, and compliance you need to carry. So there's very few players. It's more like monopolized or a oligopoly market where there's a very few players who can actually retain and stay to those type of standards because they don't allow sandboxes or like a non-regulation environment for the startups to define their own way. Like Airbnb is banned in Canada. There's only 10 buildings in Toronto that can have Airbnb condos. Like Uber is so hyper regulated as well, right? You kind of have to get a taxi license to do. So right, so it's crazy, right? So that's we did, by the way, had an exam by the SEC as well because we serviced the US when we started in 2021. We had an application that we launched. It was available in the US, and there were no clear guidance how to service US clients with the DeFi type of product. So we did went through the exam with the SEC as well when Gensler was going after everyone, even though we were a small dog, right? So it took us a while, took a lot of blood, so I had to go through that exam about a year. And security, you know how lawyers are in the US, right? It's not like it's not getting the plumber. Those guys are charging arm in the lack, and spending they're a week to analyze the documents, not half an hour. So that's I mean, overall, it's a government of lawyers, right? I mean, that's what they say. The China is the government of engineers, and the U.S. is the government of lawyers. It's governed by lawyers, right?
Yeah.
So,
yeah, we're a litigious nation. There's no doubt about it, and it slows down everything, especially for entrepreneurs. And even after you get their advisement or their filing, there's always that disclaimer of, well, this is a gray area. We're not sure. Even after you paid them that big retainer.
Yeah, and we're not liable for anything. Yeah, for any advice.
Yeah. If this doesn't work, we're going with what we know.
Exactly.
I found some stuff where in past conversations you kind of had highlighted. This is post 2022, kind of a reality check. You talked about high CPAs, low, LTVs and retail churn after Celsius. That was an experience, right, for a lot of people. You reshaped. How are you, taking that experience and reshaping, I guess, TradeFi and DeFi playbook, and what are the allocation rules you're using, or maybe the hedging mechanisms that are letting you deliver consistent risk-adjusted yields that hopefully catch the eye of traditional asset managers, so they can finally trust, a system like yours?
Yeah, listen, for us, we don't operate like Celsius or like Nexo did, right? So this is more like a shadow banking type of a business when they all actually manage your deposits to pay you a higher interest,
Right.
right? So we act as an asset manager. So as a service, we come to a B2B client, and primarily in emerging markets like Brazil, Argentina, Chile, Serbia. We talk to an operator. They want to introduce some kind of an yield or investment product to their end clients. It's usually a broker, crypto broker, or a wallet. And we construct a portfolio for them that has certain characteristics, return and risk profile. So there's no guarantees of the return. There's no guarantees of the drawdowns or the anticipation of liquidity. So we provide them an investment product that will collect either some DeFi trading strategies and some CeFi trading strategies in a collection of portfolios. And then they can offer it to their end clients, and they charge a fee for that. So we become as an asset manager as a service, and we have a lot of tools for that. We have an app, we have a dashboard, we have real-time reporting, we have different types of connectivity and custodian providers, integrations. So we make it very easy for them.
Let me jump in there.
Yeah.
That's kind of white label. Can you explain to the audience how you, and I guess you guys kind of made this decision to be kind of an API first platform. I don't know if I'm getting that right, but explain to the audience kind of how it works. If somebody came to you as a client and they wanted to offer, an institutional grade product or an institutional grade yield, how you—
it's easy. So if you're a Revolut,
having to hire a specialist, you can basically do from soup to nuts, from what I understand.
Yeah. Usually it's not the guys like Coinbase or Gemini. It's usually smaller exchanges that operate in emerging markets. So first of all, there is it's hard to hire people that know hedge fund world or quants, right? Or risk managers or portfolio managers with any experience, because they don't have those type of markets there or depths of those markets as we have here. So they'll come to us and we'll act for free as a revenue share on a revenue share basis as their asset manager as a service. We'll provide them the tools, and then they can white label our product that are existing products, or we can create a new product for them that they can white label and display on their app. So their customers that custody with them, let's say Bitcoin or a stable coin, can move from their custody wallet or trade wallet to the investment product. And quite often it's a very low risk type of products. I mean, you have T-bills that pay you 4, then you can have Morpho or Aave, some pools that pay you 6. Then they usually want 7, 8%. They usually want 8% with minimal to no drawdown. Right? So it's kind of like HFT, market neutral type of strategies that we will utilize, or some DeFi concentrated liquidity provisioning strategies that we will utilize. But there's no promise of that 8% will be constant or will be fixed or can have a drawdown. Right? So we don't really service a credit products. It's an investment product. So credit product usually have a duration and an interest, right? And then the asset management product, investment product, it has drawdown and return. So we usually look at and talk in the terms of the drawdown and return with that specific partner. And there's other metrics that more like Greek ladder metrics, right? Gamma, beta risk, right? But we don't really go into that. Usually the client just wants, okay, I want this return for my clients.
Yeah, they just want
that
to know
type
what
of
the
risk
return is
for my client. Yeah. And that type of liquidity, like let's say they're gonna want to have daily liquidity, or they want to have weekly liquidity, or they want to have monthly liquidity. Right? So then we construct the product and they'll connect our APIs. APIs are used to qualify the clients. So there's a KYC component to that. And it's used to fund movement and reporting, because all the funds are moved primarily on the pooled aggregate basis. So they'll pull the funds from their customers depending on the deposits and withdrawals into that specific product that's in their app. And then they move the difference to us, or they'll request the difference from us, right? And the funds will be moved through an API from point A to point B securely. And then we'll manage the funds at the back end of that. So we have a DeFi team and we have a centralized portfolio management team. When we use multi-managers, we don't generate our strategies for trading internally. We have about 100 different trading pods that we work with. It's like Millennium. If you know Millennium,
Sure.
in the traditional markets. Yeah, so it's similar to Millennium model for crypto. So we use about 100 pots, and we circulate them depending on the market conditions. So what we need to do, we primarily manage risk. We don't generate a trading signal. We manage execution and risk across those pots.
Sounds like the clients also get your experience with regulations, keeping people within the guardrails, correct?
Yeah, I mean, some clients like non-custodial wallets, they have no license. So we can face a client like an exchange in Brazil, and they can have their own licensing there, right, to service retail clients and to offer this type of product. But there are some clients like a wallet, let's say Bitcoin.com wallet or MetaMask wallet.
Sorry
So
about that. That
then they can use our license to offer our type of product to the customer of the region where we service because they have no license. MetaMask or non-custodial wallets, they usually just a technology, a layer on top of blockchain, right? That can give you a seed phrase and store your coins on the blockchain. But then they use our license to offer our product on their wallet to the customer in that region because they usually have no KYC. So we provide them the KYC as a service, and then they will provide them the investment product.
You know, as you made some of these pivots, you know, and of course, post of FTX, although I did see something interesting, I saw some of the assets SBF had purchased and had maybe the federal government, not that I'm not saying he wasn't wrong for what he did, but some of the assets he bought went through the roof. I mean, he was one of the initial.
Anthropic is one of them.
Exactly what I was about to say.
$380 billion. Yeah.
Yeah, and had he not been snatched up by the federal government, or exactly for what they say he did, and I'm always cautious about whether or not somebody's guilty or not guilty. We had Joby Weeks on not too long ago, and the federal government seized a tremendous amount of Bitcoin from him, and he's still on home detention, and yet they've never taken his case forward years later. It's a very strange case. Joby's an interesting character. I think the government took $23 billion in Bitcoin from him. And of course, there's no mention of where that Bitcoin is. Much like the assets of SBF, we can't tell if they're still holding those assets. They say they've liquidated some, but
the lawyers.
Yeah, where's the transparency on this? But
wow,
okay,
how many?
What do you think, George? George has a theory. Where are all those assets, George?
It's in the same place where all our gold is, and everybody else's pockets except ours. I think. Listen, I said this when they first Trump said he was going to make crypto treasuries. I'm like, all right, well, who's going to be watching it? And when they do seizures, how do we know somebody ain't sending a couple Bitcoin to their personal wallet or something?
Yeah,
you don't know. I mean, look at the
kid Lick.
Lick. This is his father was contracted from the Marshall DEA to when they have any crypto seizures that he would, I don't know, watch it, do whatever he had to do, and his kid hacked his dad's computer and stole, I don't know, billions in crypto.
No, it was millions, but it was still a lot. It was still a lot.
They just caught him, last week, Lance?
Yeah, they did. It was last week. He was rolling around with a $500,000 watch.
Where'd they catch him?
$250 on the other wrist. I can't remember. It was down in, I don't know. I can't remember. It was somewhere tropical. He had a briefcase full of cash. He had half a dozen cold storage wallets. And whether or not they're going to get all the crypto back, I have no idea. But my argument was, why is the U.S. Marshals even having a second party hold on to the crypto? I thought it was all going into our strategic Bitcoin reserve. Isn't that what the natural process? If it's seized, how come they've still got it? Probably because they're still selling it. I don't know.
Well, they say every agency that seizes, they hold on to it in case there's any victims. They pay them back and stuff. It's fishy. I don't know. It's just. Yeah, doesn't sound right. It should all go into one.
They need to put a little in their own wallet.
It should all go into one pool, one reserve, whatever exchange, whatever, how it is. And if victim needs to be paid, fine. I mean, you know how much money you seize from this, whoever you arrested. You know it's there. It's just there's too many different things going on, too many aspects where it gives them the ability, I think, for some stealing amongst government employees, because it's not like
suggest that they put me in charge of the strategic reserve. You can find me in Dubai. I'll be there. Okay, so
Dubai.
Let's talk.
What happened to Marcus? Marcus.
We need a non-extradition country if I'm going to be managing the strategic reserve.
They're gonna Dubai. You get extradited.
Let's talk about. I guess you probably stress tested a lot of stuff that you're doing, because of course you need that kind of credibility with institutions. They're not going to underwrite things that they don't know or stress tested. Can you kind of explain how you guys, make sure that you're heading on the right path? Whether, I think even for me, I don't know if it's a conservative view, but maybe how you've lowered risk.
Yeah, so there's different approaches. So you guys had a funny topic discussion right here.
Yeah.
I just watched a movie on Netflix as well when they had a stash house. I think it's a new movie with I can't remember the name, but they went with the stash house. It was full of cash
with the DEA agents, and the kids were taking it to give to the. Yeah, that was a good
Yeah.
movie. It was funny. And the father figured it out. So did his head guy. But they
But
didn't
it's
do
based on
anything
a
to
true
the
story,
kids.
by the way.
Huh?
Miami Dade, true story.
Yeah.
Oh, really?
Right?
Yeah. And
Yeah,
the
yeah.
truth of the matter is there's more of that goes on. I know some ex-agents over the years. There's, when it comes to the
No, but you
agencies,
gotta watch that because the first stash house
Oh,
they
I
hit,
know,
they
I
got
saw
like $500. Like,
No, I saw it.
Oh,
The
you
first
did?
one wasn't good. The second one, when they break through the wall and they find the buckets, the Home Depot buckets full of cash.
Yeah.
It gets interesting from that point forward. But yeah,
no,
so go ahead.
that's a different movie.
No, I think that's the movie.
Yeah, that's the movie. That's the
Oh, the one with the
original
buckets of
That's the Ben
cash?
Affleck one.
Yeah, they break through
Oh,
the
that's
wall.
with Ben Affleck. Okay, there's a different movie where there's these kids, all they're like 5 of them, and their parents all work for the DEA, so they go to school, but they don't talk about it. Their parents tell them you can't talk about
Oh,
it.
I saw that one too.
Yeah,
Yeah. And they start jacking the cartels, and they hit, they hit a big lick, and
yeah.
cartels are going
Yeah,
ballistic.
well,
'Cause they
well,
think it's dirty.
And we live in a small crypto world, right? There's so much out there, right?
Yeah.
That's beyond our eye. I mean, we're so laser focused on our little island. So on the risk side, listen, primarily that's you're looking at a couple of things, right? First of all, you have to evaluate the traders, right? So because if you're a multi-manager, you have to know who you're working with, right? So it's references. It's about 100 questions for them to fill out. It's called DDQ questionnaire that they have to fill out. You're looking at their daily data from their live accounts, so you get read access to their Binance account where they trade. You feed all the data historically and you analyze it. And then you give them the small allocation to test them for, let's say, 3 to 6 months before you're going to scale them. And that's a multi-manager side. And then on the DeFi side, primarily, you're looking at the counterparty risk in terms of the protocol. So you look at the security audits, you look at the team, you look at the token, you look at the references, you look at the volume, you look at the liquidity, you look at the market. So there's also a DDQ that you provide to the team. So that's pretty much like an institutional type great due diligence on the multi-manager side when you utilize the traders. Then on the DeFi side when you utilize the protocols. Right, and then there's a strategy, right? So the strategy, I mean, it's a little bit simpler than it sounds. I mean, it's all based on daily data that you can evaluate and counterimpose with the other strategies and the market condition to make a determination how safe is the strategy to use in that specific portfolio. Because some portfolios, let's say that we have, can target 50% return a year, right? With a 25% drawdown or 20% drawdown, right? But some others can target 7% return with 0.5% drawdown, right? So depending on the portfolio and the expectation of the client, you as a fiduciary, you build them the portfolio of those type of strategies, right? And then you keep custody of those assets, making sure that they're either custodied at the qualified custodian or at an off-exchange settlement like Copper or Cepho, or even Anchorage right now has some off-exchange settlement to minimize the counterparty exchange risk, like it happened to Bybit, right?
Yeah.
So
yeah, there's no doubt.
That's pretty much the approach that we take.
We're going to hold for a minute. We'll take a short break here. We'll be right back with Maxim Galash. And of course, we'll be talking more about what he's doing. I want to come back and talk about scaling and fundraising in this digital asset management world. I know you have a lot of experience, and I think the audience would like to hear about it. So stay tuned. We'll be right back with the Crypto Power Hour. George Valentine, Lance Miliaccio, and our special guest, Maxim Galash. Stay tuned. Lots more to cover. Don't go anywhere. We'll come look for you. You know we will.
Are you ready to stand up for your community and support your local sheriff? Join the Constitutional Sheriffs and Peace Officers Association and become a vital member of the Sheriff's Citizens Posse. At cspoa.org, we empower citizens like you through weekly webinars, arming you with the knowledge to back your constitutional county sheriff. Together, we can uphold our Constitution and ensure liberty and justice for all. Your community needs you now more than ever. Visit CSPOA.org and join the Sheriff's Citizens Posse today. Make a difference. Stand for freedom. That's CSPOA.org. Your country, your fight, your future.
What if you could predict your financial future? And what if you could trade on it? Introducing Block Trust IRA, the future in your hands. An astonishing 88,000 millionaires were created last year from the Bitcoin boom, and you could be next. Block Trust IRA is the only crypto management firm powered by AI-driven strategies, ranked #1 in the world by Bitcoin Magazine. The Block Trust IRA platform is built for everyone, from first-time buyers to seasoned investors. Predictive AI technology that was once only reserved for insiders and elites is now available to you. It's time to leave the old buy and hold strategies behind. Your assets are protected with military-grade security, offline cold storage, and $200 million in insurance. Visit BlockTrustIRA.com to book your free consultation and ask how to claim up to $2,500 in deposit bonuses today. Bitcoin changed the game. AI changes the strategy.
Hi folks, I'm here today to introduce you to the Prepper Bar from PrepperBar.com, the most unique precious metals product we have seen in a long time. These 62-gram bars are perforated and easily broken down into your choice of 3 different sizes to fit a multitude of needs. Whether it be from asset protection from inflation, economic turmoil, or its unique utility for barter and trade, the Prepper Bar makes a perfect gift for all the precious metal lovers out there. Exclusively made here in the USA and selling out fast. Available in both gold and silver, these slim Prepper Bars fit neatly in your wallet, and their utility enables use in any situation.
Forged through rigorous training and honed by the finest instructors on Earth, these canine units serve beside our nation's warriors as they fight to preserve what we cherish. When these warriors complete their duty, the Warrior Dog Foundation provides them with a home deserving of the service they've given us all. At our state-of-the-art kennels, they receive rehabilitation and care suitable for heroes, because that's what they are. Be a part of giving them a future today. Visit WarriorDogFoundation.org.
All right, welcome back to the Crypto Pow Hour, powered by Solem Global. Here with your host, Lance Migliaccio, George Ballantine, and our special guest, Maxim Galash. Listen, don't forget to hit that thumbs up button, to follow, like, share, even to subscribe. Any support, share this with your friends, help educate, help us grow, and help the crypto world learn crypto, whoever needs to. But let me give a shout out to our sponsor, because Lance and I have the perfect solution for the people that can't watch their crypto 24/7. That's why I'm here to tell you about BlockTrustIRA.com. They're bringing access to cryptocurrency wealth to everyday Americans. Their exclusive Animus AI trading platform works 24/7, analyzing market data and executing advanced crypto strategies that go far beyond buy and hold. Now, this was sophisticated technology, only for Wall Street insiders, but you know what? It's available to you, and it's no surprise that this system was named #1 crypto technology platform by Bitcoin Magazine out of more than 1,500 global competitors. And clients are already seeing over 250% returns on their investment, all with military-grade security and $200 million insurance. Your wealth is fully protected. Don't wait. Visit BigMigCrypto.com today and see how you can join this financial revolution. Once again, visit BigMigCrypto.com today and you get up to $2,500 of free crypto. I have the QR code on the screen. Take a screenshot. Save it to your photo files, but go there later because we got more crypto talk going on. All right, guys. In crypto, we trust.
You know, as we were just before the break, I mentioned, I kind of like to talk about scaling and fundraising. You know, there was an era where you raised 10 million in the retail era, and then you deliberately pivoted back to B2B and emerging markets. You know, I'm sure you took a lot of lessons from that because it still has changed. And the market's changing so rapidly that people that have a project are looking for funding. It seems like institutional money, is finally coming over and saying, sure, we're interested, we're listening. Kind of give me your take on that.
Listen, we raised about 10 million US across 3 rounds, right? So we did a seed round, then we did round A, and then we did extension for that. Our extension was right after FTX. It was necessary because we pivoted the business model. So a retail model is a little different than the B2B. Retail model is scale at all price at any cost. Don't really think much about LTV or CAC or any other like important metrics to be profitable, but get a market share, right? So while B2B, I mean, is more like we're running more of a profitable business right now rather than just scaling at any cost. So I haven't looked at the funded markets for a while, but what I've heard from the other startups that I spoke to and companies that are already, let's say, 3-5 years old, the market is not easy, right? So right now, if you look at Coinbase as a public market indication, it's been down, I think, 65% for the last 6 months. But if you look at Exodus Wallet, that's also a great business. They have strong balance sheet, profitable business, cash flow positive. They're also down, I think, 50 to 60% for the last 6 months. Look at BitGo, custodian, one of the prime custodians in the US, regulated, also down since their IPO. So all the crypto market right now is down, not because it's a bad business, just because the tendency in the market right now is leaning towards the AI, energy, defense, more like reindustrialization type of technology that money is chasing because they have an incentive there, different types of incentives. So, so the capital markets is a beast on its own that can be relative or not relative to the performance of your business. You might have a great business but have hard time to raise. You might have a shitty business but have a very good market and have an easy way to raise. So, but usually, I mean, and the public markets again in like more and more later stage, at least in the US, if you're like sub 500 million valuation, there's nothing to do on the public market for you. Preferably, have to be $1 billion. And there's like thousands of companies with $1 billion valuation on the market. So you can even get lost when you're $1 billion business because the markets became so big and the private companies stay private so long. So if you're looking at the Tropic, 380 billion, like the valuations are also, and the multiples are quite high from the perspective of the overall market sizing, right? So if 10 years ago, the market sizing was, okay, you can go public if you're $1 billion business and you're already going to get noticed. Right now, nobody know, you have no coverage, very little coverage. So no analysts, no investment banks. Yes, analysts, yes, investment, but it's not like at the scale that it used to be, right? So
sure.
So the fundraising, it's a beast on its own, and the markets, I mean, are very cyclical as well. So especially for crypto. And right now, it's not a crypto cycle today. We're in the bear market. We've been in the bear market for the last 6 months. We came down from 120 to 60. Now we're at 70. Yeah. So with all the turmoil that happens, I mean, we're lucky to stay where we are. I mean, as gold spikes, you know, and gold and oil spikes, I mean, we kind of still trail away, even though there's a high correlation between Bitcoin and say NASDAQ stocks, right? Like technology stocks. It's kind of right now fares away because of the 4-year cycle. It kind of keeps the Bitcoin low. People anticipate it to be a better market at the end of the year, but who knows, you know? I mean, anticipation or hope, it's a bad strategy. So I don't know what's going to happen to the market, but the fundraising today in the bear market is not easy for the people who are trying to look for. And
yeah,
there's no better advice than build a good business so investors come to you. I think that's the advice if I'll give it. Make sure that you don't need the money, and then the money will come to you.
You know, it always helps. We talk about it on a regular show, George and I, about, you know, the media narrative controls. And of course, when something fits what's in the narrative, I mean, like if you talk about AI or quantum computing and it's sexy or, you know, Palantir, you know what I mean? And, you know, it's the ideology that government is putting a lot of money in. That it seems like, you know, of course, those are the Wall Street darlings when you talk about the Magnificent Seven, you know. If you talk about NVIDIA, everybody wants to hear about quantum computing. You've got Elon Musk talking about quantum computing, and you even have Donald Trump trying to talk about quantum computing. I'm not sure he knows what it means, but at the end of the day, you know,
I don't even know, to be honest.
Yeah, I know it's. Here's what I know: it's really, really, really fast. That's what I know.
Yeah.
But honestly,
there's no zeros and ones,
yeah,
right? There's just
exactly
quantum.
Right. So, but it's still, That's always an upward battle. Your experience, I can just tell by the way you're talking, you have a tremendous amount of experience, and it's most likely why I'm guessing that you're on the boards of, Wadham and Flysot and Boxy and others, and they're all at different stages. When I looked at those companies, I looked like they're all kind of, at the full spectrum of some that are matured, some of them are just beginning. You find there's a common scaling trap, TradeFi and DeFi startups that they fall into, especially now in this market. You're talking about any raises, maybe $1 million to like 25 or 50 million AUM. And, is there a different model that you use to Coinchange, like maybe that multi-manager model or something else that helps you avoid that?
How do you, the new capital formation model in the market? I mean, tokens were a good model until I would say the token model was overextended by the VCs, right? They got the first access and they had an asymmetry of information compared to retail, right? So the pumping and dumping of those tokens, didn't help the industry long term.
No,
right. So because of the asymmetry of the information,
the celebrity crap, also the Kim Kardashians and the Hawk Tuas, and you had a lot of that. And of course, look at the impact. Just as an example, since we were talking about SBF, look what happened to ICP. Their token was at 600 or 700. That's a pretty strong group even now, and I think their token's sitting around $2.30 or 40 cents. Not necessarily. And you wonder, and you say to yourself, did it really deserve that kind of a blow? And really, SBF wasn't really part of the infrastructure. He was just an early participant,
supporter. Yeah. So I think the token was a good idea. The capital formation through a token. Right now, Coinbase is trying to tokenize the issuance of the stock, right? As well, they're working on that kind of a marketplace where you, as a business, you don't need to go to the SEC. You can just issue stock on chain directly. So I think that might be a good idea if they will be able to lax the regulation around it and make it globally accessible. So traditional VCs, let's say even in Canada, they're non-existent. Very few, very little capital that has taken risk. If you're coming with an idea, you're not getting any funding. If you're coming with an MVP, you're getting maybe a little bit of funding at some kind of a crazy low valuation. So people want to risk off completely. Like US is still the only probably place where people are taking risk, betting big, on different types of startups and projects that 90% will fail, right? But they know that the asymmetric upside of those 10 will pay for the full portfolio and the risk they took, right? And that's why those VCs right now are raising $10 billion funds, because the private markets became so big, right? And they can keep spreading. And first of all, they spray and pray, right? So they do like one-sided investments.
Sure.
and then when the funnel kind of matures, they start doubling down and keeping them private for whatever 10 billion, 100 billion valuations, right? So it's also a very exclusive game, right? Per se, right? And a very professional one, because before, as Buffett was saying, when he started investing, nobody had access to information, right? A renaissance when they were scanning those, right?
They had the Buffett sheet where he
the sheets,
the
right? So
and yields and inventory.
Exactly. So right now everybody has access. And it's a competitive, but it's still pretty inaccessible for the majority of the people. The people who have access, it's becoming very competitive for those few. But for the majority of ones that don't have access, they can't even benefit from that.
It's interesting when you go to GitHub and you look at some of the design groups that are out there that are using AI. It's interesting how some of the access is getting much more accessible to the average person. It wasn't available. These agents that are out there,
running the analysis right now. You don't need the Bloomberg terminal.
Yeah, did you see that? That was unbelievable. And you looked at, and I looked through the terminal. I looked at because I saw a guy at video, and I'm like, wow. And that's a terminal. What do they charge? $35,000 a month for the Bloomberg, I think, something like that.
Bloomberg is crazy.
Put it this way, I don't have one sitting here on the desk. Let's go here. Let's look a little future and talk about some of your personal insights. I went around and scraped a bunch of stuff on social media, and I caught some things you said. You called stablecoins the killer use case for global commerce, especially in inflation hit markets like Argentina, as an example. Tokenized T-bills, restaking innovations. What do you think the next leap is in passive income products? Do you see something? Maybe you've even had a client. I don't want to go into any proprietary stuff, but maybe you had a client that had an interesting concept that maybe they wanted to see if you could develop it. What do you think the next iteration we're going to see, or the next generation of where we're heading on yield products or maybe real world asset tokenization that has a yield built into
Yeah.
it? I don't know. Go from there.
I think it's a very good question. Listen, so the market matures, right? So it started
Yeah.
with the spot Bitcoin. It started with buying spot, and then people started to invest into the pools of Aves or credit market on chain. Right now, Morpho is a big deal. It's also credit market, private credit on chain. So I think what we hear right now from our partners, and our partners are primarily in emerging markets, again, right? So they want to offer tokenized stock indexes. So if you have an S&P index, they want to offer, let's say, actively managed S&P 50 index. So meaning that you pick 50 best companies out of 500, and you'll rotate through them every month or every quarter, and you offer it on through a crypto broker, so clients of that Argentinian broker can participate through USDT, as an example. So holding USDT, they can be able to invest in a stock index, actively managed index, and get out of it. That's number one. And number two, a lot of, in the US at least right now, the movement is from passive investment, so like staking, yield in Aave or Morpho, into active investments, so actively managed products. This is what we do. So composition of trading strategies into a sophisticated product that will generate certain return and risk profile. So I think in the US, the staking providers are looking for that product right now. So they offer staking, Solana or some other tokens that are POS, proof of stake, and they want to offer something different than just connection to a DeFi protocol. So they can have a wallet connect to any of the protocols out there and select and categorize a few for you. Let's say they're going to say this 5 are best. But they also want to start offering more actively managed products on Bitcoin, on non-staked assets like USDT, like Bitcoin, like XRP, like Doge. So this is, I think, the next trend for the couple of years, because this is the maturity of the market. You do spot, you do passive, now you do active. And that convergence of the markets happen as well. So let's say if you participate with USDT, before you can only invest into the crypto denominated kind of strategies, right? But right now, what people want, they want to have a Forex strategy, they want to have a commodity strategy, they want to invest into the index, stock index. So there is a convergence of traditional instruments, but the capital can go from on-chain into the traditional assets. So that's what we hear and what we're building actually as well this year.
You know, everybody I think would like to have a convertible. You would like to have a yield with a convertible kicker, something that gives you a little boost for getting early in. But let me ask you this, and I want to make sure we cover the website, and that before we close out, I want to talk about, bring your site up and maybe give your social media and your accounts a plug. But you were an electrical engineer, then you became a VC, then you built Coinchange. And I'm sure along the way, there must be a couple of principles, or at least one principle of what you've seen in successful crypto companies, which we've seen that dynamic change a lot. Is there maybe something you wish you'd internalized earlier, maybe something that's shaping your vision for bringing this scalable institutional grade yields to like the everyday user on every exchange and DAO? And it seems like your model is the 3 to 5 year window. I don't know if I'm calling that right. What are your thoughts on that?
I might have not understood your question properly, but I'll tell you one thing that I've learned. Let's say I had a couple of businesses that I've built. One was acquired. I mean, I have a service business that's still kind of I'm on the board with. I did many investments as an angel. I think if you're starting early, and every startup starts early, there's only people, right? So you have 3-4 people that start in the business, let's say with the early employee, like 5.
Yeah, sure.
Everything comes down to people. So you have to be very, very careful, very, very selective, very, very thoughtful about what skill set and what people you bring to the table, not only from the skills, but also from the persona standpoint, their principles, their worldviews, their aspirations, and their skills, obviously, right? They have to know what they're doing. I mean, that's kind of number one. But then also on the EQ side, you have to make sure that you guys can work together for a little while, because there's markets shift and things go up and down. And you have to make sure that there's a good synergy, so the partners stay along or the early employees stay along. So, and in terms of our products, I mean, we are planning. I mean, internally, at least in the business, we're planning every year. We have like a yearly plan that we want to target a certain way, and then we have daily plans and weekly plans. Because right now with the age of AI, I mean, we're also trying to embed as much as we can over the workflows, making them agentic, making us think faster, making some things redundant that we don't want to spend time on. So I think we want to see the real outcomes, not only the conversations, but like some real, let's say you can ship a product or you can ship a feature, or you can get a customer, or you can do a survey, or you can provide a proposal. Usually we do it within days or like weekly target. Every Monday we'll set like what I want to do this week, one thing that I want to achieve by Friday. And then along the way, you have smaller things you need to do to get to that Friday. So yeah, 3-year plan is good, but usually it's like a yearly plan, and then we kind of chime away quarterly and then weekly.
Gotcha. Makes sense. These agentic agents for deliverability, it's one of those, it's quickly moving. A lot of great catchphrases, but it's the real world application of taking that agent, getting it involved where it can make, deliveries faster, can make data searches quicker, can, look at competitors and do analysis and provide you that while you're talking to it on Telegram on your way into work, and it has a report sitting on your desk, which of course changes the speed in which people can, deliver on a product, make that deliverable, that much faster to market, which I think a lot of people are trying to make that last mile connection, and they're starting to, but you can see the floundering online, the discussions.
I'll give you an example right now. So let's say we're doing the research, how to take our investment product, how to do Reg D, how to get an RIA, how to do, how to set up a feeder fund in the US. And before we go talk to the lawyers, we have our AI ninja, right? The guy who actually turns out he has like 15 agents working for him. He has a SEC examiner agent. He has a legal attorney agent.
I was about to say that too, because what a great way to save on those fees.
Yeah, then you kind of put together the package, the roadmap. You align your team internally, the key stakeholders. When they go to the conversation to a lawyer, you don't waste time.
Yeah.
Right? You already know what you're asking. You already have exact questions. Okay, taxation-wise, solicitation-wise, like you already know what needs to be answered by a lawyer just to prove that the model did the correct analysis, right? And then everybody else is aware. Okay, guys, go spend a couple of hours reading that, and everybody knows. They don't need to wonder, right? So it makes like your research, and you still need to question the output, obviously, right? And then go to the professional to kind of evaluate that, but it aligns everyone way faster and kind of levels the playing field, right? So even if you don't have that skill internally, you can outsource that skill to an agent that have a skill already embedded, right?
Yeah, those skills and the education of those agents, it's reducing the hallucination. Of course, memory, like you said, is still a problem, but that is coming forward rapidly. When I started first using it 2 years ago, there was a lot of that, and there's a lot less now. You don't see as much hallucination, because I have a legal agent I use for a lot of stuff, and it used to even hallucinate case citations. So you had to really double check a lot of things if you were using it. All right, George, let's pull up the website. I want to make sure in the time we give a little coverage here. And let's plug your social media, try to get you some follows. And of course, maybe just walk us through the places that people can learn more about your company, the best way to go through this quickly.
Thanks, guys. I appreciate it. So if you go to solutions, I'll show you just something. I mean, and you go to B2C Analytics dashboard. So this is the latest Bitcoin product right now that we're going to be taking to market in the US through one of our distribution partners. It's one of the top 5 staking providers in the world, and they will be introducing that shortly, and it's going to be fully licensed and regulated offering in the US. So if you scroll down, like that talks about our product. You can look at the performance. Scroll down, you're looking at the growth of $1 across a certain period of time. You look at the monthly portfolio returns, right? So you look at 2024, 2025. You look at the risk analysis. So this is the volatility of the portfolio. So we provide a very detailed, granular information, and that the composition of that portfolio is a multi-strategy. You'll see it lower. So this is the drawdowns that I was talking about, right? So this one has a max of 2%. So you can go down daily return distribution. So the portfolio construction insights in section 3 gives you the understanding. Look, this is a CFI delta neutral, DeFi market neutral. Then there's some directional components to the strategy at the top. So it's a different types of strategies that are non-correlated and that behave in a certain way when the market goes through abnormalities, let's say, right? We're trying to normalize the behavior of the portfolio so it doesn't overachieve, doesn't go to 100% return, but doesn't fall down to 50% down, right? So you never
the estimated annual return on this particular product, just as a curiosity question for the audience.
You can go all the way up. Yeah, it's foundational. So this one should be around 6-7% return. Gotcha. So you see annualized return 8.75.
Gotcha.
You see the second line, right? So cumulative
Yes, I
means
do.
for 2 years, so 8.75 for 1 year. And you have Sharp. So Sharp always like a then percentage of positive days, right? So it
Yeah.
gives you 58% of positive days, right? So if you look at it daily, and we report daily to our clients, to our partners, they can see almost 40% of the days can be negative for them, right? But at the end of the day, 58% will get you 8% annualized, 8.7.
Gotcha.
And the drawdown, I think here, max drawdown is you see 2%. So it means from the peak, you can only go down 2%. Like we're trying to keep it very strict on the drawdown side. That's how we pretty much approach, because most of our clients are not super educated on the investment products. They don't really need to know Sartino, Kalmar, VAR. They want to know, okay, how much can I lose?
Sure.
How much can I make? And how many days of the year I'm going to be positive, right? So I know that, and that's kind of their expectations of the product, right?
Gotcha.
Yeah, so you can go all the way down, and it talks a little bit more about the different markets and strategies. We went through here. You can go all the way down where we have the strategies components. Here. So then you have a monthly return. This is the attribution by the sleeve. So sleeve means a certain type of a strategy. So CFI delta neutral. It's let's say market making strategy or HFT strategy. This is the delta neutral, when you don't take directional bet on the coin, right? In your strategy.
On a
So
product
it's
like this,
blue.
just curiosity, how many data sets do you think it's using to come up with its decision making?
I mean, a lot. I mean, it's continuous analysis. It's like historical analysis, real-time data analysis. Data is a big part of data is everything,
Yeah, of course.
pretty much in any type of the portfolio simulation and the analysis. And then portfolio changes, right? So our portfolio managers and risk managers, that's why he's saying here here it's return attribution by sleeve. So it means that the percentage per each type of strategy also changes, depending on the market condition. Right. So there's a human, a portfolio manager, who will decide, knowing the strategies, looking at the tools, that okay, now we have to go no directional
So it'll
strategies in this
transition
market.
into different strategies during
Within those categories.
Gotcha.
So you have low risk directional, DeFi market neutral, CFI delta neutral. So within those three categories, you can have all types of different managers. Right. It can be George, it can be Max, it can be Lance. Right. So everybody has their own trading teams and trading signals and trading strategies. Then you combine and rotate them depending on how you perceive the market and how you perceive the risk based on the data and risk management.
Gotcha. Well, interesting.
So yeah, and then
go ahead.
This product is available through an API, so that's why we work as a white label solution, right? So I think it's under the product. I think it's under solutions. Yeah, white label or an API right here. Yeah, so you can request the documentation. You can go look at the documentation here. We can give you the keys to start testing and playing in the sandbox. But there's some pre-existing products that we offer, right? If it's a large client who's going to say, okay, we're going to be depositing, I don't know, $20-30 million from our clients to you guys in the next 2-3 months, we'll tailor a product for them, right? Depending on what exactly the exposure they want, what risk return profile they're looking at. So on that, right now we're also launching the Vault. So it's like a tokenized hedge fund. We're going to be launching the Vault. You probably have heard of Athena. Athena is a stablecoin basis trade strategy, tokenized. They have their own token. We won't have our own token. We'll have a token receipt. So when you, through your MetaMask, are going to put some dollars into our Vault, you're going to get a receipt and token. And the token will follow through your P&L. So if you lose money, if one of those red days, you're going to have a negative. If you make money, it's going to be green. So it's going to follow your P&L. So we're going to be launching that product Q2. It's going to be a tokenized hedge fund product.
Gotcha. Interesting. I'll have to look at that.
And it's also available, again, through an SDK. So if you're a wallet, you can integrate it, white label it, and offer it to the end client on your app. We don't go directly to retail customers. We are servicing all our business partners, primarily fintechs.
Do you ever see a future where you might be going directly to retail, or no?
No, we already did that. We did it for the first 2 years before FTX, before Celsius. That was, we had 150,000 registered customers at that point. But after the Celsius and FTX, it was impossible to stay in the retail market whatsoever. And I think it was a smart decision that was done. So we're pretty much no, I won't say we're infrastructure, but we are a technology partner for those projects. Yeah.
All right, listen, Max, we really appreciate you taking the time today. Of course, time's the most valuable commodity. Thank you so much for joining. I think it was a really interesting interview. Hopefully the audience enjoyed it. We try to take you from A to Z on this show. You know that. We'll be back here on Friday at 7 a.m. Eastern Standard, probably do an education piece. We don't have an interview set up for that today. So you guys join us. We'll take you through the news and kind of catch up with everything that went on for the week. That'll be a big day. And of course, follow Solum Global over on X, the Crypto Power Hour on X, George Valentine under G Valentine and Lance Miliaccio. You can catch us on our regular show, 11 a.m. Monday through Friday, Eastern Standard. Hit that follow button. If you want to hit us with a Rumble Rant tip on the way out the door, please do. We appreciate you tuning in. George, last words, my brother.
Y'all have a great day. It's Wednesday. We'll see you 11 a.m. for the Big Mig Show in a few hours. God bless.
Thank you very much.
Are you ready to stand up for your community and support your local sheriff? Join the Constitutional Sheriffs and Peace Officers Association and become a vital member of the Sheriff's Citizens Posse. At CSPOA.org, we empower citizens like you through weekly webinars, arming you with the knowledge to back your constitutional county sheriff. Together, we can uphold our Constitution and ensure liberty and justice for all. Your community needs you now more than ever. Visit CSPOA.org and join the Sheriff's Citizens Posse today. Make a difference. Stand for freedom. That's CSPOA.org. Your country, your fight, your future.
What if you could predict your financial future? And what if you could trade on it? Introducing Block Trust IRA, the future in your hands. An astonishing 88,000 millionaires were created last year from the Bitcoin boom, and you could be next. Block Trust IRA is the only crypto management firm powered by AI-driven strategies, ranked #1 in the world by Bitcoin Magazine. The Block Trust IRA platform is built for everyone, from first-time buyers to seasoned investors. Predictive AI technology that was once only reserved for insiders and elites is now available to you. It's time to leave the old buy and hold strategies behind. Your assets are protected with military-grade security, offline cold storage, and $200 million in insurance. Visit BlockTrustIRA.com to book your free consultation and ask how to claim up to $2,500 in deposit bonuses today. Bitcoin changed the game. AI changes the strategy.
Hi folks, I'm here today to introduce you to the Prepper Bar from PrepperBar.com, the most unique precious metals product we have seen in a long time. These 62-gram bars are perforated and easily broken down into your choice of 3 different sizes to fit a multitude of needs. Whether it be from asset protection from inflation, economic turmoil, or its unique utility for barter and trade, the Prepper Bar makes a perfect gift for all the precious metal lovers out there. Exclusively made here in the USA and selling out fast. Available in both gold and silver, these slim Prepper Bars fit neatly in your wallet, and their utility enables use in any situation.
Forged through rigorous training and honed by the finest instructors on Earth, these canine units serve beside our nation's warriors as they fight to preserve what we cherish. When these warriors complete their duty, the Warrior Dog Foundation provides them with a home deserving of the service they've given us all. At our state-of-the-art kennels, they receive rehabilitation and care suitable for heroes, because that's what they are. Be a part of giving them a future today. Visit WarriorDogFoundation.org.